Good morning, everybody, and welcome to this SmartCharts European session. Hope you're all well. All right, so we had that US CPI inflation report yesterday. We know inflation measures the change of goods and services in an economy, and it's an important metric because used by central banks to determine interest rate policy. And there were no changes to what the market was expecting. The month-on-month and year-on-year figures were exactly the same. We didn't get too much movement around the US dollar, but we did get a nice little boost in US stock indices, which actually surged higher because it's a good thing, okay, that inflation is still low, then suggests that to get it even lower to the 2% target, right now it's at 2.6%, then there may be some more interest rate cuts in the future from the Federal Reserve. So then that helped put a bid in US stock indices, and US stock indices, stock markets generally like low interest rates because it means that they can borrow money more cheaply and invest into business growth, which helps to pick up the economy and so on. So that will be an interesting trend to keep an eye on, with many US stocks actually surging to record highs on the news announcement yesterday as well. So that's been a big theme really this whole year, the uptrend in US stock indices, boosted by the US presidential election beginning of last month as well. We also had the Bank of Canada interest rate statement, and it was widely expected they were going to cut interest rates from 3.75 to 3.25%. So they did that. That is the fifth consecutive interest rate cut from the Bank of Canada, and the second oversized one. So generally central banks will cut interest rates maybe 25 basis points, but this one was like a 50 basis points cut. So it's known as a jumbo cut in the financial markets, okay? And so the interesting part though was the statement that came along with it, and to suggest that even though interest rates are now much lower, they will still look at economic data and adjust them accordingly if they need to. So that actually did send a bit of weakness in the Canadian dollar as well. And so some interesting things to keep an eye out on there. I mean, both news announcements just came in really as expected. There wasn't any huge movements around it, apart from the move in US stock indices. But the Canadian dollar will be interesting. But now that news announcement is passed, and of course we can look for potential trading opportunities. And there is something interesting that has been highlighted from the London and Sydney trading floors, so we'll head over to SmartCharts in a moment. Now today we have the Swiss National Bank policy rate and the ECB refinancing rates as well. So we have another two central banks, and both of these central banks are expected to cut interest rates, okay, so that's what is expected. But the key is the press conference, okay, just like we learned a little bit more yesterday in the Bank of Canada press conference. It will be interesting to see what the Swiss National Bank, the European Central Bank, have to say about the economy and the future direction of interest rate policies. So that's what traders will be looking at. So let's see if we get any market movements developing around it. Of course, we highlight the news announcements because of risk management first and foremost. Make sure you're not too heavily overexposed to the Swiss or the Euro today. You know, we can still trade them, but we don't want to be too heavily overexposed on many trades on those currencies, because if it's a bit wild and the market goes the other way on a surprise news announcement, then you might get hit on all of your trades. So, you know, risk management, number one focus, okay? And let's dive into SmartCharts and let's see what's going on there from a technical analysis side. Okay, so one currency pair that has been highlighted from the London City trading floors is actually Euro-Canadian on 180 phase change of strategy. Now, the 180 phase change of strategy is one of the strategies that we cover in your 3-day trader certification workshop, and is used to help identify momentum trading conditions. Well, that's at least how you first off trading it, okay? So when you first start trading, you really gotta have a focus, okay? Doing one thing well, and then doing that on multiple different things to have multiple streams of income in your trading. Traditionally, you start off and you look for momentum trends, okay? So typically we go through how to identify momentum trends in your 3-day trader certification workshop, and we know we like to see, well, if you zoom out, you can see this historically in the past. We like to see that kind of staircase pattern to tell us we have that staircase trend, okay? So that's what we like to see. And we've had that recently down here, and now maybe we're moving back higher. So we have a repeated pattern of behavior here, okay? On top of what SmartCharts is looking for, by the way. So if you're not familiar with how SmartCharts is helping you, make sure you're utilizing all the resources available to you. And make sure you're reviewing all your e-learning materials in the Learn section. Make sure you are attending all your online classes. webinars, boot camps, events, coaching sessions as well. And really what you want to do is marry up what SmartCharts is doing, okay, and the power of the algorithmic technology, and just lining it up that with some human insight, real-time pattern recognition. All right. So what we actually have here is on top of what SmartCharts is finding, we have this higher high, higher low cycles. We have evidence that traders have been buying this market at a low price, but they've also been willing to keep buying at a high price, which we can see has been happening here historically in the past, where buyers have been willing to buy this market at a low price, but they've also been willing to keep buying at a high price. Okay, so that is already a clue that maybe there are buyers willing to keep on driving this market higher to new highs as they have been doing so before. But what is also interesting here is we can see that price has broken this high point here. This previous high point is broken through, and now it's come back and potentially retesting it. So these previous highs, okay, just like here on the left hand side, can sometimes break through and then sometimes can be retested. Okay, so we have that. And what is also interesting is that, look, we had a trend here that had been developing, and we have potentially a trend here that maybe could develop. Okay, and in this middle part, we were just going a bit sideways, weren't we? You could look at moving averages. In the trend, the moving averages are going in the right direction. You can see here in this trading range, your moving averages are going a bit up and down, sideways. The bars are just breaking through them and not really bouncing off them. Okay, but what is interesting is that now we've maybe gotten back inside that trading range, because you can see here, price now, this high point was actually the bottom of this trading range, wasn't it? So this is also known as what is a false breakout. So you have these technical analysis chart patterns and you trade inside those patterns, but when it breaks out, people look for a trend. So like here, for example, price broke out of the range and it started to trend, so there's a trading opportunity there, and then look for the trend to continue. But if it doesn't continue and comes back inside the trading range, then it's known as a false breakout. Okay, and what that could mean is, you know, all these sellers who try to trade it when it broke out here, maybe broke out here, well now suddenly they're not around, right? Because it's come back inside of the trading range. So if there's no sellers left, then maybe buyers might take control of the market. Okay, so what we have here is a confluence of support levels, and we also have this angular price here as well. And that's what we look for. We look for confluence of support levels and resistance levels, all to be developing around the same place. So on top of highlighting potential trading opportunities, SmartCharts will also help the risk management side, which is the most important. Get the up arrow, we'll populate an entry price at the blue dot, stop loss at the red dot, target the green dot, which can all be adjusted according to your own user preferences. It will do all the risk management calculations, and it's just really important to keep that risk low to make sure you're able to deal with the random distributions of wins and losses that develop throughout the season, throughout the days, throughout the week, throughout the months of trading. And I like to set an expiry of a current bar close and then decline or accept the trade here at the bottom. And what that means is if buyers don't turn up and go to that entry level, by the time this current daily bar closes, this will just expire, didn't win, didn't lose, didn't cost anything. But if buyers did decide to turn out, that would trigger into a live open trade, then either it goes to the target level or the stop loss level. So either it turns into a winner or a loser. Okay. All right, that's it from me. Big day ahead. Lots of central bank news announcements. Let's see how the market responds. In the meantime, that's it from me. I'm going to wish you all the best for your trading. Bye for now.